Good morning, everybody. Welcome to the Hardcore Mortgage Real Estate Business Podcast. Today is lucky number 7, February 7th, 2024. Here we are on a Wednesday, bright sunny afternoon in southeastern Michigan. This is the Hardcore Mortgage Real Estate Business Podcast brought to you by Capital Mortgage Funding, powered by CMG Home Loans, NMLS number 1820. We have a great panel today. We have Miss Lisa Lawson. Hi, Lisa.
Morning, everybody.
Mr. John Kolb. Good morning, John Kolb.
Good morning, all.
And Mr. Harvey Freed. Hi, Harv.
Hey, everyone.
Hopefully we'll get Becky Alley on here. I'm sure she's running around. Hopefully she can join us. But today, let's talk about something that we rarely spend a lot of time on. It's really going contrary to my belief in talking about interest rates all the time. Because, panel, all the general public knows about are what are the rates, what are the rates, what are the rates? What are the rates doing today? I rarely want to spend so much time on interest rates, but I feel it's a very topical subject right this second because last week the Federal Reserve met as they normally do, and there's so much speculation on when they're going to lower rates because out of the last 18 months, the Federal Reserve raised rates 11 times, and they've stood pat the last 4 times, everybody, including last week. There is this thing going around, I like to use that word thing, going around that people aren't buying homes because interest rates are so high. We know that's not true. We want to go over that. But there's so much speculation that arose out of the meeting that when will the Federal Reserve cut rates? What will the rates go down to? We know that the real estate market panel is going gangbusters. So I'm going to start with you, Lisa Lawson. Federal Reserve held the rates steady for the 4th straight meeting. This has not affected the housing market at all. Demand, Lisa, for housing is still outpacing supply, and this is going to continue. So, Lisa Lawson, what do you foresee going into the spring and summer in terms of rates and in terms of demand?
Well, it's always spring and summer busy season, right? So I think we're going to continue this situation where the supply doing any.
Well, we lost her.
Yeah, I think Lisa, we have a bad connection. How about, can you hear us now?
I can hear you fine. Can you hear me?
Yep. Yes, now we can.
Okay, sorry about that. Yeah, I mean, I think the rates are predicted to drop throughout the year.
Yeah, we got a bad connection. Lisa, can you log off and log back on? I'm going to go to John Kolb on this. John, What are your thoughts right now? And John, we talk about it all the time. It has not affected the housing market, and the demand for housing right now is still outpacing the supply. I believe this is going to continue. What are your thoughts based on the Fed meeting saying they're not going to go ahead and be quick to reduce rates? What's your stat? What do you believe is going to happen this spring and summer?
I think we're just going to get a lot of hesitancy like we have had in the past, where people are, there's still people that are worried that there's going to be a bubble burst for housing prices, which just isn't going to happen. And then there's a lot of hesitancy for the rates. People thinking that the rates are going to come back down, so they're waiting for the rates to come down, which is a bad idea because those two ideas are relevant together. Because if you wait to see if there's a housing burst and there isn't, and the prices continue to go up, and you wait for rates to come down, and when the rates come down, now the houses are more expensive. We talk about this all the time, that you can't wait. If you're ready to get into the market, rates will come down. We'll get you refinanced and get you a cheaper rate and payment.
I agree with that. Harvey Freed, same question to you. It has not affected the housing market. I'm going to give you a number after I hear your answer and your comments, basically. It has not affected the housing market. These rates have not affected the demand for housing is outpacing the supply. This is going to continue. What are you seeing in the market right now between right this second, February 7th, and say the end of the summer at the end of August?
Yeah, Harry, we were hoping that the interest rates would help the inventory situation. It's really a correlation there. So the difference between 6% and 7%, or 7% and 8%, or 5% and 6%, like you said here, it's not a lot. It's $57 $57 if you move a full percent per 100,000. So if you borrow 200,000, your payment is 114 more. If you borrow 300,000, your payment's 171 more. If the rates drop, will it increase inventory? Maybe. And I don't think anything is going to really be a catalyst to help increase the inventory in 2024. So maybe, just maybe, it'll give the nudge for some of the empty nesters and some of the retirees to put their homes on the market.
Yeah, we're going to further drill down into that, Harvey. I want to get Lisa back on here. And Lisa, I hope that the connection's better. We talked about supply and demand. It's really, that's what affecting the housing market, certainly not interest rates. And I'm just asking for you, what do you foresee in your market between right now, February 7th, and the end of August going into Labor Day?
Yeah, I mean, it's always our busy season, like I started to say. And supply and demand is definitely where it's at. I mean, the interest rates that the Fed control have nothing to really do with mortgages. Those are short-term lending rates. So people get all it, and I hate to have a but I mean, that short-term rate doesn't control what mortgage rates do. So I think the people who are waiting on the sidelines for the Feds to do things are going to miss out. And I think the shortage is going to continue. We have a huge demand. There's a lot of people who've been on the sidelines for the past couple of years waiting. And I think some people are getting sick of renting and they're going to pull the trigger.
Well, there's no question about it. And Harvey hit the nail on the head. The difference between a 7% interest rate on 100,000 going down to 6%, I've got a little bit more than Harvey did. Maybe my calculator's all ramped up. It was about $65. Okay, it's less than $65. So on 200,000, Harvey's right, it's less than $130,000. So the bottom line is that people have already figured out that the difference between a 7% rate and a 6% rate in the big picture when it comes to affording a house is not that much. So we don't want to hear that the rates have affected people from buying houses. Now, there's a huge difference between 3 and 7%, but not between where we are now, 7%, maybe going down to 6%, which I don't believe is going to do it. Well, we're going to pull the panel. Lisa, I'm going to come back to you first on this. When will the Fed start cutting rates? Hey, that's a great question, right, Lisa? Let's discuss this. As a result of the above supply and demand, what are your thoughts on really when the Fed, and I know I'm asking you for a prediction, it's really all based on inflation, isn't it? It's not Correct. Based on, some willy-nilly thing. If the inflation approaches the 2% target rate that the Fed is looking for, we might, because they've held it the last 4 meetings, we might see a rate cut sooner rather than later if it comes close to the 2% target rate, right?
Yeah, I mean, that's exactly the math of it. So I'm hoping that we don't, but the reality is we can't see and predict the future. So as inflation continues to increase, we're all consumers, we're all out there buying groceries, gas, everything else. As inflation continues to increase, the likelihood that the Feds will cut the rate will also increase to try to slow that pace of inflation. Am I hoping that it doesn't happen? Of course, but the reality is it's probably going to happen, and I'm going to guess it's going to happen in the summer.
Yeah, panel, John, Harvey, Lisa, we're spending a lot of time on this morning. Hardcore Mortgage Real Estate Business Podcast brought to you by Capital Mortgage Funding, powered by CMG Home Loans, NMLS number 1820. We're spending a lot of time on this, an unusual amount of time, because we want the consumers to be educated. A couple different things. You can't wait. If you find a house now and you can afford it, you got to pull the trigger, because there aren't going to be many houses coming on the market for sale. Number 2 is we don't see the rates coming down. They always go up faster, John Kolb, than they do coming down. The Fed raised the rates 11 times in the past 18 months and only held it steady the last 4 meetings. So if that isn't proof that rates always go up faster than they come down, I don't know what is. So John Kolb, my question to you, the new normal, will the mortgage rates be between 7 and 6%? And I phrase it like that because they're closer to 7 than they are 6 right now. Will they be between 7 and 6% for the foreseeable future, John Kolb?
Well, I mean, you're asking somebody who's already got a little side wager with you on where they're going to be by the end of the year. So for the foreseeable future, yeah, I think by at least the first 2 quarters, I think they're going to still be above 6. But my bet is that they're going to dip below 6, even if it's only for a day. John's a winner. That they'll dip below 6, and we'll be able to lock some people in the high 5s by the end of the year.
But if you were giving somebody advice right this second, okay, and I'm going to put you on the spot because you like it.
Mhm.
And even though the Spartans looked horrible last night, they were stuck on 45 for 5 minutes, John Kolb. And then they only scored 9 points after that. It was a horrible loss. So I don't want to hear about predictions. I want to hear about you giving the best advice to your clients. If somebody said to you, John, should I wait to buy a house because you predict rates are going to come down before the end of the year, even only for a minute, so you win that bet with Harry Glanz, what will you say to somebody?
No, because if we have the same appreciation as we did last year at 6%, a $300,000 home at the beginning of this year is going to be worth $318 at the end of the year. So that 20 grand that the price just went up on you offset that 1% decrease in the rate. So buy now and then refinance later. I mean, we have
I like it.
We have options for zero cost refinancing for past clients. I mean, it's a no-brainer.
You see, everybody out there, this is why we believe the Hardcore Mortgage Real Estate Business Podcast, the Hardcore Mortgage Real Estate Business Show, gives the best advice. We take our own personal issues out of it, whatever side bet we have. If we root for Michigan or Michigan State, like Lisa Lawson does and John Kolb does, we give objective advice. Harvey Freed, what's your opinion? And it's really, we're spending a lot of time on this morning because we want to give the best advice out there. We're meeting with clients every day. We're on the street every day. We're talking to the real estate community. Harvey Freed, the real estate community's had to adjust to this situation too, with the lack of supply out there. This is a seller's market. It's going to continue, Harvey Freed, for the foreseeable future, correct?
Yeah, definitely this year, 2024. A lot of pocket listings popping up. When a real estate agent gets a listing, they sort of announce it to their own office first to see if they have some internal buyers. We're seeing a lot of that going on. And at the end of the day, we're seeing homes being priced. The ones that are being priced properly are even getting multiple bids, and they're going over asking. So it's going to be a tough market for buyers. And we're back to about another 45 days or so, maybe before the whole herd comes out and wants to buy the same home you're looking at. And Harry, a little segue, because our guests this weekend on Saturday's Hardcore Mortgage Show are going to talk about the inventory just in their backyard. We know it here in Oakland County, but they're going to really specify, if you want to be in these cities, how important it is to be approved and ready to go, and probably have a little bit of extra cash to make that bid a little bit over the asking, a little bit over the appraised value.
Yeah, I'm glad you teased our guests. We'll save that for the end of the podcast. I'm glad you teased it. They do work in a very specialized area, Harvey. We teased it a little bit. We'll come back to it at the end of the podcast. I think it's going to be a pretty powerful show with these two on there, and the specialty market that they serve, have a little bit of experience there. And it's going to be an awesome Hardcore Mortgage Real Estate and Business Show this Saturday from 9 to 10 on 97.1. Lisa Lawson, as a result of the Fed meeting last week, rates actually went up. They actually went up to a little bit over 7%. My belief is the market panicked, the bond market panicked, the 10-year is up, and they did settle down a little bit at the beginning of the week. But this is the power of the Fed. The Fed comes out, they were expecting to get clarity from Chairman Powell, and he even went on 60 Minutes. I don't know if you saw it, Lisa, on panel. He was on 60 Minutes. It's such a topic now on when they're going to lower rates. He went on 60 Minutes to explain they're not talking about lower rates yet. They're talking about watching what inflation does and getting closer to the 2% target rate of inflation. Now, the best example I could give, Lisa, is when you print $3 to $5 trillion in money during COVID, and people have all that, I'm going to use a term that I hate, free money in their pocket. They're going to Gucci, they're going to Somerset, they're going wherever, and they're spending all the free money. What do you think's going to happen to prices? They're going to go up. People are spending money. So of course it was a natural, it was really a natural disaster. And the cause of inflation was all the free money floating around in the market. Well, now all that free money, 2.5 years later, is cycled through the economy and it's spent. People want to know not only when interest rates come down, Lisa Lawson, when are car prices coming down? What are appliances, other goods and services, food, bread, eggs, milk? When are all those things going to come down, Lisa? And you know what he said? He said he doesn't look at those things coming down dramatically. He doesn't. Because why would people drop prices dramatically when we are such a consumer-oriented society? Look at, all you have to do is take a look at gas. When gas went up from $1.75 to $2, people were outraged. But when it hit $3.75 to $4, nobody stopped buying gas. People got used to the higher prices, Lisa. So as a result of last week, the Fed coming out and saying there's no timetable to go ahead and cut rates. They want to see what inflation does. And in real numbers, we've already illustrated that the difference between a 7% rate and a 6% rate on $100,000 is less than $65. So, Lisa, why are we expecting rates to come down?
I don't know. I mean, the reality is I'm just looking it up. Like the price of milk the year I was born was 83 cents for a gallon. Inflation happens. That prices are always going up. People bought cars for what, $8,000 in the 60s and 70s. Why would you think all of a sudden it's going to go in reverse? Yes, maybe the rate of inflation has been a little more elevated, but inflation happens. It's a part of a natural economy. So the fact that people are quote unquote waiting for things to reverse, I think is crazy, because I'm really not sure when in history that happened, where all of a sudden something we buy now was cheaper or now than it was 20 years ago. So the same with the price of houses, the same with the price of commodities, all these people saying, wait, all they're doing is costing you money. They're costing money because you're going to pay more for a house now than you did before. You're going to pay, possibly a higher rate than you maybe could have got 3-4 years ago because you were waiting then. So you have to do in your situation. If you can afford it and you have the money and it's a great, great opportunity for your family, it shouldn't matter, because what's rent? What are you gaining from rent? Nothing. You get no equity. You can't sell a rental unit later unless you're obviously the landlord. But if you're renting, you can't sell that to make a profit later and roll that into your next property for down payment. What are you getting? You get nothing. So do right by yourself, get the real information, crunch the numbers. And if it makes sense for you, talk to a professional, talk to somebody here at Hardcore, give us a call at Capital Mortgage Funding and help us, let us help you get started.
Lisa, that's such a great segue. And you bring up a great point. I'm going to throw it to John Kolb. John Kolb, rents aren't coming down. You're paying rent. Rents are not coming down. Lisa brings up a great point. So you're going to rent and throw money away. We already said don't wait for houses, John Kolb. It's still going to be a seller market on both primary residence and second homes, vacation homes. Somebody wants to ask me this question. What are you waiting for? Why wait, John Kolb? Such a great point Lisa brings up. Rents are not coming down.
I mean, yeah, I agree. I mean, we keep talking about it's the same thing. I mean, why are you going to wait? Everything is going to be more expensive by the time that you make the decision. And I don't know what else to say other than don't wait. I mean, if you're ready to get into the home, get into the home. You can always adjust your rate down the road if you need to. You can't adjust the price, that's for sure. If the price comes down, great. But everything is pointing to prices still going up.
That's right. And by the way, John Kolb, the jobs market came out last week too, and there were almost double the amount of jobs that the economy produced. Also, what is a good thing, most that's what drives an economy. Okay, jobs and housing drive an economy, and we're seeing the job market increase. And these aren't just service jobs either. They're jobs that are coming back into the market. And while that's a good thing, it's a delicate balance that the Fed is watching. Can they get to a 2% target rate of inflation? We're going to see. Harvey, I'm going to move on to you. No one insight to the seller's market. Talk about the guests that you're going to bring on, the realtors that you're going to bring on the show this weekend.
Well, thanks, Harry. And I want to go back. I started the show off and my numbers were a little off. I tried to do the math in my head. Like you said, Harry, it's about $68 from 6 to 7%. Maybe it's a little bit off. Use your financial calculator. Either way, it's not a huge difference. Go buy that house now. And our agents coming on, Dana Cooper and Lori Glass, are going to say the same thing. All the top agents we've had on the Hardcore Mortgage Show for 2024, we keep going over the same really important stuff, which is get in there now. Try to buy this house before 2024 prices hit you. It's almost like going to that car dealership at the end of one year, and you can buy last year's model because they've got a handful of them on the lot. Same type of thing. Try to get those 2023 prices before the weather really changed. Even just the sun coming out the other day, all the agents were out there and they said it's the spring market already. So just that 40-degree weather we've been having is sort of tipping the scales over to what we already know is coming, a true seller's market again.
Yeah, before we get into last words from Lisa, John, and you, Harvey, I want to go ahead and just expand a little bit about Dana Cooper and Lori Glass. We're going to tease it a little bit for the show. Dana and Lori specialize in Huntington Woods. They live there. They do a lot of business in the Huntington Woods, Michigan market. It's an extremely popular area, good schools, good city services, everything. But the houses there, they're scarce. And if there are 2 or 3 listings that pop up every month, that's a lot for that area. So they're going to go over really what's going on in their market, how the market evolves, and it evolves very quickly in that area. Okay, last words for the day. Lisa Lawson, you are up.
Yeah, I mean, the reality is we say this all the time. I think sometimes fear holds people back. They hear a lot of fear mongering in the news and they hear a lot of misinformation. So they just think it's not the right time and they're not going to try. But it's just a phone call. It's just a few minutes of your time. There's a program out there that we can get you into a house. Maybe you qualify for down payment assistance. You know, some of these have subsidized rates. The rates are in the 6s for example, for Michigan, get a 6 flat if you don't need down payment assistance, 6 5/8 if you do. So don't let all the information that you hear out there scare you. Make the call, and maybe the answer is not right now. Maybe you got to do a little work first. Maybe it'll be next year, but you don't know until you try.
I really like that. Lisa always takes good care of her clients. She's really involved with her clients and really has a customer service attitude. She serves her clients very, very well. Lisa, thank you very much for that. John Kolb, last words of the day.
I want to just start by saying I think the East Side needs to invest in better internet because Lisa pauses a lot. But
Sorry.
That's just an Oakland County kid ripping on a Macomb kid.
Well,
So,
they're working on it in my subdivision.
I think
now.
that's a Spartan. That's a Spartan ripping on a Wolverine. Actually, it's really what it is.
Hey, Lisa, are you guys still using dial-up out there?
Nice.
No, but anyway, Lisa, a great point, and I just want to say what we keep saying is just don't wait. Get out there, start investigating. Having the conversation is free. Talk to your lender, talk to your real estate agent. Have the conversation; it's free.
Great, awesome, John Kolb, as usual. Harvey Freed, let's talk last words from you today on February 7th, 2024.
Well, the east and west side areas we grew up used to be separated by Woodward, and now we think it's pushed back a little bit more east. Maybe Van Dyke, definitely not Gratiot, Lisa. But I know you don't have that. Appreciate that. Yeah, the last thing is Fannie Mae and Freddie Mac. That's the government agency that services and makes all the rules for a lot of these guaranteed mortgages. They've set these guidelines up for everybody. Everyone, we play by the same rules. So gather your documentation. It's really all about documents. We find that the clients that have all their ducks in a row, old saying there, are just having a way easier time at it. Again, can you communicate with your HR department? Yes, believe it or not, on a mortgage, we verify your employment. That's right. Right before you close, we need a verification of employment letter on top of your pay stubs and your W-2s. And this important documentation, these 6 or 7 pieces of documents, have been the same documents since I started over 32 years ago. So again, let us share with you these documents that are needed, again, on a VA loan, your DD-214, your certificate of eligibility, whatever documents really relate to your purchase, you got to get those. You got to make sure they're legible. And I'll leave it at that for now, Harry. Make your life easy. Get in touch with us and we'll help you with a smooth mortgage.
Great. Thank you for that, Harvey. Always a pleasure spending time with Lisa, John, Harvey. Wish Becky could have been on here. Roberto Beauchesne, our producer, director in the booth. Last words for me are, the difference between a 7% and a 6% mortgage on 100,000 is less than $65 a month. So you see, the rates really aren't holding you back. What's holding you back might be the supply of houses on the market. We know that's a fact. What's going to happen this year, in my opinion, much of the same. There isn't going to be a tremendous of new supply coming on the market. The demand is going to be there. A lot of people in your shoes, when you're listening to this podcast, are out looking for new homes. You're going to be fighting over the same homes. And if you're hoping that interest rates come down, that really has nothing to do with it. It really doesn't. Find the house, lock it in, we'll take care of it. And then if and when rates go down, we will get you that lower rate. Of course, our phone number is 1-800-LOW-RATE. It's not 1-800-HIGH-RATE. It's 1-800-LOW-RATE. That's 800-569-7283 in Michigan. It's 1-800-3569-7283 outstate. And locally, it's 248-569-7283. It all translates to low rates, okay? That's what we want to provide. We'll also provide you with great customer service and objective advice, all right? You got to be able to afford it. We'll help you clean up your credit if you have less than desirable credit, but that should not prevent you from buying a house. As Harvey said, and I'm going to leave it with this, everybody, Wednesday, February 7th, 2024, get your documents in order. For Roberta Beauchene, Harvey Freed, Lisa Lawson, John Kolb, Becky Alley's out there somewhere. I am Harry Glanz, and this has been the Hardcore Mortgage Real Estate Business Podcast. Thank you very much, everybody, and we'll see you soon.